Let's chat commodities now, where we have seen a mixed trend continue into the markets there. The precious metal space have seen a bit of profit taking, flat actually on your screen, 13.20 just about holding for gold, and the silver prices are holding above $22 per ounce even at this point in time. It's really the crude prices which seem to be under pressure because the markets are expecting the US weekly inventories to gain up for a third straight week, and that really could be bringing in some pressure. On your screens, flat to steady gains coming in for that one as well. The base metal space is seeing some action coming in from the Chinese participants after 1 week of national holidays, and that's the reason perhaps that you have seen 0.5% of a gain coming across all of those commodities right now. Let's get in then. Ashok Mittal, he's company head retail, MK Global Financial Services, and he joins us live on the show. Ashok, hi, welcome. How are you reading the precious metal markets now? Because while yesterday we did see some gains because of perhaps the US partial shutdown that has continued for an 8th straight day as well, but the markets really haven't seen much of a follow-through buying coming in today.
Hi Manisha, I think the momentum on the bullion side, gold and silver, both we are expecting to remain positive because one is the worry on the market in terms of how US will handle the pressure or whether they will be able to meet their requirements by 17th October or will they default. So at the same time we are not really seeing demand coming from the investment side. You see SPDR holdings are low. Physical market buying also has not happened. But fundamentally, if you look at, we see some kind of a supply side constraints, the strikes which are happening in Africa, plus China has opened, so we expect some demand coming from China. As well as technically, we are very close to, say, support level. So our idea is that buying at the current levels around $13.10, $13.20 should be good idea, and we don't expect prices going below $1,300 in the near term. And on the higher side, we expect around 1350 levels to be expected. So we have a good risk ratio. And in terms of rupee terms in MCX, we expect that 29,000 to 30,000. This is the 1,000 rupees range which we are expecting, and we don't expect 29,000 will be broken on the downside. So suggesting to buy somewhere near 29,000, maybe 300, 400, and keeping a target of say very close to 30,000 will be a good risk ratio strategy in case of gold. Similarly, silver also, if you look at $22, always has been a good resistance and support level on either side. Once it broke on the downside, it was not able to go up beyond that. Now we expect that this $22 should be a support which should hold on, and we can see say around $23 in the next a few sessions. And in terms of rupee terms, I think we should see back to say around 50,000 rupees target on silver. So buying anywhere close to say 49,000 should be a good idea. So here also I think when you buy, keep around say 50 cents as stop loss, which is 500 rupees on silver, and when you expect say $1 or so on the upside, that will be around say 1,000 rupees plus movement you can on the higher side you can expect. So basically bullions, we think buying on the dips should be the strategy, and we expect momentum to build on the higher side where prices should look positive for next few sessions.
All right, so bullish for 2 to 3 sessions in case of precious metal space there. But Ashok, would you continue buying into this space as we head into the peak of festive season? Do you think this quarter actually could get in some returns on positive side for this sector?
I think yes, because one is we are expecting some demand coming up from India because of the festivals, because of the marriages and a lot of festivals. The second half is always in fact better, so we will expect some demand coming in from the investment side, consumption side. And we have also seen that now since customers clear a lot of gold inventories, more imports are happening now in India. And when we speak to the spot market people, jewelers, they are seeing that they have seen the dip which was there in the demand in the last few weeks, I will say, because of the sentiment was very negative in terms of consumption. But again, that build-up is happening, and they have started building the inventories for the festival season. So I believe there will be some kind of uptick in the demand. Secondly, we have to also see how US takes turn in terms of events. So if the uncertainty say remains for next few more days, so people will buy gold because of the uncertainty. Another factor which can impact gold silver prices will be say dollar rupee, where people now think that rupee might appreciate a lot, but I think we will be somewhere between 60 to 64 rupees. So we are at say currently around say 62. So we are in the middle of that. So any 1 rupee movement here and there will not really impact bullion prices majorly. We have already seen a dip happening. So now we have bounced back from those levels. So I think this quarter or this half of the financial year should be better for investment in gold and silver both.
Mr. Mittal, very quickly, while you have a buy in case of precious metal space, how would you look at the industrial commodities? Do you think because of all the concerns that are in US, this space or this sector could be under pressure?
Yeah, I think the energy products, crude oil as well as the base metals, say copper, etc. will remain under pressure because mainly there is a concern that Asian economies, including China, may not really grow the way we had expected. So that pressure will always remain. So, and also we are not seeing upticks happening on the industrial activity in a major way. So unless industrial activity happens, because you don't have investment demand etc. happening on the basement side, they might remain under pressure for next few weeks.
Fair point, Ashok. We'll let you go at that. Appreciate you joining us with your strategies.